Tick index is a very short-term intraday indicator that measures the bullish or bearish activity in New York Stock Exchange of stocks throughout the day. The ticks is an indicator that gives traders an intraday look at the internal strength or weakness of the market. That is, the strength or weakness below the whatever or overall markets is up to the point or percentage basis. By comparing the numbers of the stocks advancing to the stocks declining, the indicators reflect the market's up or down momentum at the given momentum. So TIX measures the difference between the number of the New York Stock Exchange of stocks trading on the uptick, meaning last price higher than the previous price, and the number of the stocks trading on the downtick, last price lower than the previous price. For example, if the given momentum 5,200 stocks we trading from their previous price, and 4,800 we are trading down from the previous price, the TIX reading would be plus 400 5,200 minus 4,800 positive. Rising ticks trading reading are the bullish signals. The opposite is true for the negative decided ticks. However, they very high or low ticks reading often indicates temporary market exhaustion. The declining ticks is the rising market indicates stocks are being to trade off their highs. Significantly, the uptrend may reverse at the least temporarily. Likewise, rising ticks in a declining market indicates stocks are starting to the trade off their losses, and a reversal of the downtrends is possible. Let's step back and look at the big picture. Why is sticks important? How is the relevant to you as the day trade or the scalper, and why you need to pay attention to ticks? Well, because the ticks index is the record event of the buying and the selling actions of the entire index. This tells us how many stocks are selling on the below asking price, or how many stocks are being bought at above the asking price. It tells you how the aggressive are buyers overall at all momentum in time. If all major markets suddenly have the aggressive sellers, then you would want to know this and maybe not take the positive until you found your why. If the markets suddenly have the aggressive buyers, then perhaps the highly liquid ETF like the SPY will be in the play to the quick to the scalping play. There's the momentum created by these sudden buyers markets. So how to read ticks? The ticks offer traders a short-term perspective of overall market sentiment. This is extremely valuable for scalping traders. The ratio stocks on the uptick versus and the numbers of the stocks on the downtick percent of the short-term actionable point. Tick index value between the 200 and the minus 300 indicates in neutral market sentiment. Bullish is very valuable become the higher than the plus 200, and the bearish when it's lower than minus 300. Very bullish is when its value is higher than the plus 500, and very bearish when it's lower than the minus 500s, and tick value higher than the 1000 or the lower than 1000 indicates the extreme conditions, and the reversal of the corrections of the market is likely. When the confirmed with other two sticks, reading can be used to identify trading turning points. Let's look at a few strategies that combine sticks index with the price patterns and important market levels. First strategy, ticks range trading. Ticks overbought and oversold waves can vary depend on the conditions. Reading above the 500 indicates that the overbought conditions, and reading below 500 indicates the oversold market. Reading of above 1000 or below 1000 are extreme conditions, and we will try to concentrate our attention on these levels. A simple trading approach is to deploy trade when it's the tick signals and overbought or oversold market, as price is the testing the support and resistance levels or trading range. There's the wave, a 1 minute chart with the resistance zones established by these swing highs. As the market trades into this resistance zone, the ticks move above the 1000, signaling the overbought market. Price taking projections that are and the ticks indicators turn down. A short sale would have been placed when the price dropped back below the resistance level. Projective zone would be placed just above the high or rejections, which is the top of the swing move. Here's the important point. You must scalp these overbought or oversold readings. Why? If the price is important, the key level is market. You don't trade simply because the ticks is 1000 or 1000. Use these conjunctions with the price. Here's the several ticks trades around support resistance level. The second strategy involves ticks divergence. Ticks overall setups are probably the most popular used of the ticks indicators. Divergence between the price and the ticks occurs when the price markets is high and the ticks markets the lower high or the higher low. The signals are often followed by the short-term divergence or corrections. In this example, after a swing to the upside, the price again retests its literally high and upper and the resistance zone, and the ticks exceed 1000. However, this ticks overbought high was lower than the previous ticks overbought high. This divergence between the price and the ticks meant that the market was relying with the fever stocks, making upticks as a sign of internal weakness, and set up another short sale opportunity. When price dropped back below the lower resistance level, in this case of long ticks divergence signals, the price makes a new low, but the ticks indicator makes the higher low. In this example, the price fell to the new low, but the corresponding tick lows was higher than the previous enriched low. Long trade low have been intended when the price trade back above the first low, just with the spot placed below the most recent low. As always, keep an eye on lay levels, and divergence occurs in the important area, it has been changed of the complexions. Also wait for the trend line breakout to increase your channels of successful trade. This way will you also filter some bad divergence signals. Here are some valid tricks divergence trades. The third strategy involves a zero line cross of the ticks index, and in addition to its usefulness, its trading range, the ticks can also set up trades in trading markets. In a strong uptrend, any counter movement is actually marked by the ticks fluctuations between 100 and 100. In this situation, 100 becomes the oversold level more often that now the ticks test the zero line. These tests offer opportunities to the enter and direction to the privilegation trend. In this example, SPY was in the uptrend and the tick reached the overbought level above plus 500, which indicates the strong uptrend in market. In such situation, the goal is to buy the pullback As we talked to the previous strategies about the keys levels, let's use FIB replacements to confirm the zero level crossover as the tick dropped below the zero price, also reached the 550 percent Fibonacci retracement line. The combining of the tick oversold signals and the 50% retracement over read a higher probability for an up move. You can also use these techniques with the pivot points. In this example, we can downtrend the tricks move towards the zero level and the price stopped at the point line. You can also add the moving average to confirm the better short-term trend. Here's another example of the tick zero line crossover trades at the 50% Fibonacci level. The tick index offers trades the advantage of the observed market, sometimes for a short period of time. This gives the small window into the opportunity for the trade. It also gives the opportunity to not take the trade. Patience is required when the trading is the setup. The tick should be given some to the bottom out in the uptrend or top to the downtrend, and don't expect the sudden price reservoir when the tick indicator simply hits the zero line. Other technical factors should be consulted before entering any trades, such as employing the price patterns as percentage in the previous examples. So the tick indicators should be used to set up the confirmation to a trade, not as the standalone tool, but utilizing the trick in conjunction with the price patterns, technical indicators, and in the context of the overall trend and the market environments, you can take better buy and sell decisions. As always, if you learned something new and found value, leave us a like and show your support. Subscribe to our channel and hit the bell icon to stay notified when we upload video next time. Until next time.